All right, good evening, everybody. It's Monday, December 7th, 7 p.m. I have got an awesome guest here with me. His name is Ki Youngju. He goes by Ki. Awesome guy. Got to know him right around March or April earlier this year. Fantastic analysis. He is the CEO of CryptoQuant, where they do a lot of on-chain analysis of Bitcoin data, lots of metrics pertaining to how you can, as a trader or an investor in Bitcoin, get to analyze the market. So I'm going to be sitting down with Ki, and we're going to be discussing a lot of things that he's seeing in the market from the standpoint of metrics, the on-chain analysis that he does and his firm does. So, hang tight, hold off your questions till the end. And what I'm going to do is I'm going to let Ki take over and do his screen share, so he can give us a brief overview of exactly what his platform is, which is CryptoQuant. And I want him to show just a 2 to 3 minute intro of the pro side. All right, Ki, take it away.
Yeah. Just a second. Can you see my screen?
Yep, I can see your screen.
Yep. So really thanks for having me, Amol. So basically, CryptoQuant is a on-chain data platform for traders. So what we provide is that we are focusing on chain data, especially capital flows between exchanges and other entities. The crypto price is eventually determined on exchanges. You have to send some coins to sell. You have to send some coins to exchanges to sell coins, right? So that's why we are more focusing on labeling those entities, address labels. So you can see our data through Plotly chart for free right here. So you can see the full screen, or you can zoom in, zoom out. But the problem here is that you can't draw some lines or type the text or something, and you can't utilize some indicators like moving average, MACD, rate of change, and that kind of thing. So we provide a pro chart. It's a standalone version of TradingView with our on-chain data. So by utilizing this TradingView charts, you can, if you are a trader, you are more familiar with using TradingView charts, and that's more helpful if you see on-chain data, because most of on-chain data looks like very spiky. It looks like pretty noisy, right? Yeah. So you will need some smoothing those lines to get some insights.
Yeah. Perfect. So can you go over some of the metrics that you have right there on the top left? Sorry, on the Crypto Pro Quant right there. Right there. Yeah, the metrics, the metric bar right on the left. Yeah, right there. Yeah. So can you first of all tell us some of the most useful indicators or metrics that you have on there, something that you like to look at on a day-to-day basis? Because you and I are in some private Telegram groups, and you often share a lot of data points. So if my members were to sign up for your platform, what should they be paying attention to?
So basically, we provide market data, network data, exchange inflows and outflows, reserve, miner inflows and outflows, the flows between miners and exchanges, and a bunch of indicators. But I recommend to monitor exchange inflows mean. It means the average amount of inflows to exchanges. So you can see how much deposits are ongoing by whales or retail investors. When this value goes below 1.5 BTC, that's going to be deposits from retail investors. But when this value goes above 1.5 and even 2 BTC, that's going to be with deposits from whales. So I specifically draw a line here, 1.5 and 2, when this value ranging 1.5 and between 1.5 and 2, that's going to be the dumping or correction signal. And when this value goes above 2 and price is going sideways, the mass dumping would come soon. And where let me explain about this. There are two types of whales: leading whales and victim whales. So as you can see here, there was huge dumping, huge correction here. So the correction risks pretty much high, right? This range, right? And then the correction happened, but the value, this value goes above 2, right? And these inflows coming from victim whales. So whales, they actually deposited to exchanges, but they didn't sell any BTC. So
interesting.
yeah.
So you're saying that sometimes the victim whales are possibly under pressure and they might deposit Bitcoin to exchanges just to get ready to pull the trigger to sell, just in case the market starts breaking down further. But you're saying in this case, where you are right now, 26th, 27th of November, it looks like they didn't necessarily sell more Bitcoin because obviously the price went back up.
Exactly. So
Got it.
I would say it's pretty obvious that when this value goes above 1.5 or 2, the price never ever going bullish. The price is likely to be bearish or going sideways. So as you can see here, when this value goes above 1.5, the correction happened and then going sideways. And
Interesting.
when this value goes below 1.5, the price is going bullish, right? So
right.
This is the recent data, the latest data, and if you see the historical data, there was dumping when this value goes above 2 on the March great sell-off this year. And also 2018, there was some dumping happens when this value goes above 2. And 2019 as well. I have historical data here. Okay, I can't find historical data.
Yeah.
Yeah, anyways.
No, understood. I think I get that. So that's a great point. So let's sort of move. Okay, so we understand that one of the most important metrics that you pay attention to is the amount of Bitcoin being moved onto exchanges, right? Inflow, the mean inflows. Now, of course, we understand that whales can sometimes utilize that Bitcoin, because I think one of the questions that I had asked you several weeks ago is it possible that whales move that Bitcoin over to maybe buy altcoins? That was actually a question that one of my community members had. Any answer to that?
Yeah, that's why the Bitcoin, the price is likely to be going sideways as well, right? It's not
Interesting.
necessarily selling pressure. So, yeah.
That's a good point. So how does one differentiate, aside from this indicator, what else would you look at as a complementary indicator to give you an idea, maybe more of a sound reasoning of, okay, it's possible that this indicator is telling me that there's more Bitcoin being moved onto exchanges, but that instead of knowing that prices are going to go sideways, like how do you know that the sell pressure is going to come through some of the on-chain metrics that you're seeing? Like what else do you personally look at?
So for selling pressure, I would see whale ratio. So exchange whale ratio is that it's calculated by the total top 10 deposit transactions divided by the total inflows on exchanges. So when you see spot exchange inflows here, when this value goes above 95%, which means the total inflows came from top 10 inflows. I mean, 95% of total inflows came from top 10 inflows from whales.
Mm-hmm.
When this value goes above 95%, that's going to be a bearish. The price is likely to be bearish. And when this value goes below, 95%, that's going to be a bullish trend. So as you can see here, we hit over 95% when the price plunge happened. And then as you can see here, we've been below 95% since the March gray sell-off. It was
Wow.
really, really bullish. Yeah.
So, okay, perfect. So you're saying that at present moment, we are currently above 95%. Am I right?
Yeah.
Okay. So what does that tell you now? I mean, where are you in terms of the sentiment in the market and what kind of, because I've seen your tweets and you said that you're kind of short-term bearish, but obviously you're long-term bullish. Now, can you put that in context of time and let's just say the aggressiveness of the bearishness? Like when the odd thing about the crypto community is that as soon as you even put up a bearish chart, everybody fucking hates you, you know? um, and people think that you're already, just a bear and you think that Bitcoin is going to crash. That's not what we're saying, right? We as traders, we have to look for precautionary measures of how to mitigate risk in our positions or protect our capital. Now, I've seen you kind of post these short-term bearish charts, and for me, that's a normal thing. But how do you tell other people that, hey, at present moment, you might want to be careful because here are the metrics that I'm seeing in the market, and this is why I'm short-term bearish. Like, can you elaborate on that?
Yeah, sure. So you mean you want to explain a more elaborate?
Yeah, like why should people be listening to you right now? Because Bitcoin has gone up, quite aggressively. Every time, people thought that we might stop at 13,000, we broke up. We thought we would stop at 15 or 16,000, we broke up. Now we're at 19,000, so close to all-time highs. Why should people look at your analysis and they should say, okay, well, we should pay attention to Key because he's providing important metrics versus outright just saying that, you know what, I don't care. I definitely think Bitcoin is going to break up. Like, why is it that, you are short-term bearish?
So basically, I would say, according to on-chain data, whales, they don't hold Bitcoins anymore. It's, I would say OG whales, old gangster whales.
Yeah.
I use appropriate word, but anyways, so we on-chain data can't see the spot inflows from institutional investors, but we can see the BTC OG whales. They stopped their move. That was good for bullish rally. So, for example, according to latest data, the exchange inflow mean, as I showed you, that hits 2 times, that hits over 2 Bitcoins 2 times, and 2.5 BTC. It's the 8-month high since the March gray sell-off, which means whales are too active on exchanges. And if you look at BTC reserve in all exchanges, there is no going downward trend and it goes upward. And this much uptick is also happened on July 28th when the prices was breaking 11K from 9K, and price got corrected after going sideways for a month. So I don't specifically think the price is like obviously bearish, but what I want to say is just the price is likely to go sideways as well, because it's not, we can't see the breaking 20K really soon, because there are very big selling pressure on the 20K, right? And
Yeah,
on-chain data also shows that as well, not as well as order book or market data.
of course.
Yeah, and as you know, their Coinbase Pro, they lots of institutional investors use Coinbase as a OTC deals, Coinbase custody, and Genesis Trading. Those two firms, they helped the MicroStrategies OTC deals. So whenever Coinbase decided to, help some OTC deals, they make a new wallet, and then they send around 8,000 Bitcoins to those custody wallets. And other exchanges, OTC desks are doing the same. So those kind of activities are applied since September this year. So a large significant amount of outflows from exchanges were happened since September to at the end of November.
Yeah,
And as you can see here, all exchanges outflow mean here is decreasing, which means retail investors are active retail investors, they're withdrawing Bitcoins, and whales, they don't withdrawing Bitcoins, which means they don't hold Bitcoins anymore. So they want to keep Bitcoins on exchanges to make them available to sell, I would say.
interesting.
Yeah.
I see what you're saying. So when bigger whales are keeping Bitcoin on exchanges, their purpose is generally to sell them. Now you're saying that up until September point, they were generally taking the Bitcoin off exchanges, but now they're either depositing them on exchanges or they're not as heavily taking them off exchanges. Am I correct to say that?
Yeah, exactly.
Perfect. Okay, good to know. Okay, so what chart are we looking at right now? This is the exchange outflows.
Yeah, this is exchange outflow mean, and as you can see, it kept its value below the 6 BTC, and it was always above 6 BTC since I would say September this year. As you can
Okay.
see, now there were huge outflows in the bull market. And less supplies on exchanges indicates, the
Less sell
price.
pressure.
Yeah, less selling pressure. Yeah.
Perfect. Well, this is great because this kind of goes into the question that you asked me before the call, which was exactly where am I in terms of my mindset of being, bullish or bearish. So if you don't mind, let me share my screen real quick,
Sure.
and we can sort of compare notes of exactly where I am versus, where your analysis is, right? So you said you're short-term bearish. Now, I'm technically, you could say I'm short-term neutral because I'm not in a Bitcoin long position, but I'm not willing to short just yet. I have spot Bitcoin, but I have not really, decided to sell that just yet either. I started to trim my IRA account, which is my retirement account, which I regularly move GBT positions in and out of. And that goes along with something that you were saying is, there is some sell pressure that is available on the market. And that's one of the reasons why I'm, starting to trim down my IRA account. Now, simply put, I'm kind of looking at this as sort of a compression sort of funnel, if you will. We call these like a pennant, bull pennant, whatever you want to call it. And in these, the way I do technical analysis, this is potentially a continuation pattern where you have A, B, C, D, E. And if you get a breakout outside this triangle, meaning you take out this D wave right here and price holds above this area like this, well, the chances are we're probably pushing much higher, right? And that's really how this pattern works. Now, of course, that pattern doesn't mean anything unless you actually get that breakout out of here. So all we're really doing is we're compressing in this area. But what scares me about this area is that we're so darn close to the all-time highs. And yet when I look on, exchange data for sellers, like say Coinbase or Bitfinex, I see a lot of sellers just lined up right around $19,500, $20,000, and that goes along with what you were saying, which is there is some sell pressure that's being seen, with your on-chain data, which is again visible on what I see in terms of my analysis. So this tells me that at the very least, if we don't break above 19.5, we're more than likely headed down back towards these lows, or at least close to these lows, which is like 17.4, 17.5. Now, if that breaks, so if this area right here breaks, right, then we're likely headed towards like 16,000 flat. Maybe, who knows, on a weekly basis, we might head down for a weekly retest of this level right here, which is an untested area. So in technical analysis, is very simple, right? You're basically looking for higher timeframes of tested versus untested levels. The tested level right here is 16,225, which we hit right here first, and then we aggressively sold off. Then we pop back up again. But this marker right here, which is $19,287, that's a key resistance marker that we're struggling to break above. So at the very least, like I said, if we break down on a weekly basis, we should be heading down towards this previous low, which is the 16,225 level. If we break that, then on a weekly basis, we should be heading down to the next strong weekly level, which is around $14,000. Now, I don't think that I can say, or anyone can say for that matter, that we're just going to straight slice down here, because I don't think an event like what happened in March right here is going to happen another time in the near future. But it's possible, and I'm keeping my eyes and ears open to it. So for now, what I see is, at least in this compression pattern, it's just a wait and see. If I were to bet on any side, I'd probably say we get at least a short-term correction down, but I'm not confident enough to short the market just yet. You give me a breakdown maybe below 18.5, 18.7 or something, I might be inclined to short, but I wouldn't size up until we start getting back, under 18,000 or something. So yeah, those are my thoughts.
Yeah, sounds solid. And I'm thinking of closing my short if the prices will range around one, as you said, like 18.5 or not 19.5, because there are lots of formulas out there. People are trying to buy the dip, right? And institutional, as I said before, we on-chain data can't tell spot paid inflows from institutional investors. So that's why I'm kind of worried about my position right now.
Okay. Fair enough. You know, so the other argument to this is, um, I mean, I come from almost like 11 years of trading in the stock market. And, the one thing that we notice as traders, and I'm sure you notice this too, because you've done a lot of analysis of how markets, function. I'm sure you've understood how sentiment analysis works, like you just explained, where you may have some aggressive FOMO buyers and stuff come in. And see, the thing is, the reason people in our community and you and I notice these things is because we're paying attention to the clues and the noise of the market. And I think the noise of the market is telling me that there are too many people that are positioned to one side. Like, like here's what I see in the market right now. I see many people who can only see Bitcoin going up from here. Now, it's fine if it goes up. Like, I have no problem longing Bitcoin. There's nothing wrong with that. But the pain trade would be that if Bitcoin goes down from here, how would those people cover their longs? Well, if you start covering, massive long positions down in the market, well, that would imply a lot of closures in a lot of positions because there's a lot of leverage that's taken place in this whole entire trend for the last several months. So the pain trade is that everybody's positioned long and the pain will be to the downside. Now, the other part of that pain trade is that, we have to go jump out to the macro side, which is the dollar. Everybody, I think, if you look across the Twitter sphere and even crypto Twitter, people keep talking about the death of the dollar and, Bitcoin is going to replace the dollar. That to me is a little bit premature and probably, foolish because currencies, especially like the US dollar currency, is not going to fall apart like in a year. It may take decades. And given that the United States currency, the US dollar, is backed actually by the physical military, it's backed by the United States economy, and it's backed by the democratic government of the United States, it's hard for me to listen to people when they say it's not backed by anything because that's a kind of a useless point. You can't say that just because a currency is not backed by gold, it's not backed by anything. It's backed by the full power and the weight of the United States. That's what it's backed by. And for as far as I know, there's research that came out earlier this year from Swift, which gathers all the world cash inflows and outflows, exactly what the world trade is doing, and they said that 79.5% of world global trade is transacted in U.S. dollars. And so the reason I bring this topic up is because everybody, in my opinion, is right now positioned short dollar. Their position probably at present moment, short gold, and their position long Bitcoin. Okay, or I'm sorry, long gold and long Bitcoin. So if you get the dollar moving up, well, I think gold is probably going to start breaking down, and more than likely, Bitcoin is going to start breaking down. See, that to me is, the best. This is like the best positioning in the market that tells me that everybody's on one side. And if you have to exploit everybody in the market, well, you just nudge the market in the other direction, which is push the dollar up, start making, people start covering and going into the safety asset, which is the dollar, which would mean that people would sell Bitcoin $4, gold $4, US equities $4. So that's kind of where I am, in terms of short term. Like if the dollar gets a pop, well, then Bitcoin sells off. And the final point that I want to make is, for the last several months, if you look from basically the beginning of August all the way, I don't know, till like November, gold and Bitcoin have basically had an inverse relationship. And I think I can even map that right here in my chart. So let's do this, right? So let's do, let's do this. I don't know what's going on here. Let's do this over here. Okay. All right. So let's turn this. Okay. So, I mean, we could kind of see, you know, for the last several months, let me turn off this volume. For the last several months, as gold was pretty much flattening out or rolling over sideways and down, Bitcoin was going up. Well, just over the last, you know, several days, we can now finally see as Bitcoin has been going sideways, gold has started to tick back up. So I'm kind of thinking that, who knows, maybe the inverse, you know, correlation trade might start working again, which is maybe Bitcoin retraces and gold is going to start, you know, pushing up a little bit. So those are kind of my thoughts, you know, long-winded answer, but that's kind of where I am.
Thanks for sharing all this. It sounds really solid, and lots of Korean analysts thinks the same. I had a call with the famous Korean analyst yesterday, and he said lots of people, especially institutional investors, they're longing Bitcoin because of, you know, people finding uncorrelated assets, stocks, and, you know, other assets are too much correlated with other factors and variables, and Bitcoin itself it's so isolated. So they just want to hedge their assets by you know, putting Bitcoins like at least 10% to their portfolio.
Yeah. No, I mean, I totally agree with that. I do think that the institutional players are definitely getting more involved. But I'm kind of right there with you, you know, just to kind of wrap up the topic. I do think that short term we might get a pullback. But, you know, listen, I would be more than happy if Bitcoin broke out tomorrow. And, you know, if it's at $20,000 tomorrow, I'll be one of the happiest people too. I'm okay with either case. So, you know, I guess we'll see. We'll see what happens over the coming days. But let's do this, Key. Let me ask my community members if they have any questions. If not, you know, we could kind of wrap it up here unless you have other things that you want to talk about.
That's it for now, I think. Yeah.
Okay. By the way, I do want to discuss your plans real quick. You know, so the professional plan, the one that we were looking at, I think it's only $29 per month right now. I think that's a pretty solid deal. So people could, you said, I can give them my referral code right here and they can try out the pro side for 1 month free, correct?
Exactly.
Okay, solid work. Okay, so I will definitely shoot this over to my community members and hopefully they could give it a shot. Let me see. So we got one question from one of our members. He said, top 3 tools on CryptoQuant that you like to follow. I think I can answer this one. You said you like watching the exchange mean inflows, right? So let me find this.
Yeah,
Let me see.
exchange, inflow mean.
Inflow mean. And can you explain this one more time exactly what this means?
So it's the average amount of deposits on exchanges.
Got it. Average amount of deposits on exchanges. Okay. The other one was outflow.
The other one is flow indicator, exchange whale ratio.
Exchange whale ratio. Okay. Can you explain this one real quick?
So it's the top 10 inflows divided by total inflows.
Got it. Top 10 inflows divided by total inflows.
The last one is stablecoins ratio. You can find it right. Yeah, USD, stablecoin ratio, USD. Yeah, that one. So this is the value. Can you overlap the price, Bitcoin price? Click the compare button. Yeah, click that. So this indicator is the Bitcoin reserve divided by stablecoin reserve on exchanges. So whenever this value goes above, around 40, 45, that means we have a really powerful selling pressure. And when this value goes below, around 50 or 20, we have a pretty much powerful buying pressure is ongoing. So yeah, pretty good hit rate, I think.
Got it. Got it. So at present moment, the way it is right now, 26.42, should this kind of imply that there's decent buy pressure?
Decent buy pressure, I think. It's weaker than, the buying pressure on October. Yeah, which was
this one right here.
Yeah, bull run started right before.
Right.
Yeah.
Whoops. Let me do this. Let's do yellow. So you're talking about this area right here,
Yep.
and the price was over here before it exploded.
Yep.
Okay, got it.
And can I explain one more indicator? The last
Yeah,
one.
of course, of course.
We'll click the menu and then go to stablecoin, the left side of the menu, and exchange flows, transactions count inflow. So whenever people decided to buy some Bitcoins, they send stable coins to exchanges, right? So this is the number of deposits to exchanges for stable coins. And when this value goes, skyrocketed, the price is likely to go up because people decided to buy Bitcoins by sending some stable coins there. And this value is more, going higher since stablecoins are more used these days. BUSD, HUSD, USDC, and other stablecoins are kind of eating up USDT market share lately. So these number of transactions are also, going up lately. Yeah.
Interesting. Well, perfect, man. Let's see if we have any more questions. If not, I could wrap it up. Let's see here. All right, folks, if you have any more questions, you got 30 seconds to ask. I got to let Key go. He's been generous enough to give us 45 minutes. Let's see here. Okay. All right, perfect, Key. Well, listen, man, I think this was a fantastic conversation. Are you going to have some tutorials for this, or are there tutorials for specific indicators and how to use them?
We're planning to, add some FAQs and the tutorials for this product. But we only have YouTube channel right now. You'll find YouTube channel. I'll send you a link through the chat.
Okay. Last question. One of our members asked, will these be available on TradingView? Well, I guess these are on TradingView, but through your platform only right now, right?
It's a standalone version of TradingView. It's only available on our website.
Okay, perfect. Yeah, that makes sense because obviously this is a premium service. Okay. Well, listen, man, I'm not gonna keep you long enough here. So that's pretty much it. That's all I have for you. Hopefully we can do this again because our conversations are always great. I always learn a lot from you. But yeah, let's do this again soon, okay?
Yep. Really, thanks for having me. I learned a lot too today.
Awesome. All right. Thanks, Key. Take care. We'll talk soon.
Yeah. Thank you so much. Bye-bye.